Trump's tariffs have been in the headlines for weeks. However, the imposition of them last week didn't go so smoothly for stocks and the US dollar. President Trump now seems to be backtracking with delaying some of these tariffs on Canada and Mexico, but is the damage already done? This is a special report at exam.com. I'm Cristina Marujos, and with me today is Rafi Boyadjian, our lead market analyst. So, Rafi, the US dollar rallied on Trump's presidential victory with the expectation that his tariff pledges would be inflationary. However, we saw the dollar take a severe hit on the imposition of these tariffs last week. How can this be explained?
Well, Christina, that is indeed a very good question because, like you said, we saw quite a strong rally in the US dollar soon after Trump won the general election in a landslide victory. And the reason back then why investors were kind of buying the dollar and selling other currencies was the fact that, the assumption was that should Trump go ahead and impose tariffs, that it's going to do more harm for other countries than it is for the US economy. But of course, another point here to remember is that back then the US economy was doing much better, towards the end of 2024, and even until recently there were few signs of trouble in the world's largest economy. But lately we are seeing some signs of cracks in the US economy. Potentially we're headed towards a slowdown. There's even some talk of a recession, which at this point, it's probably a little bit far-fetched, but of course it cannot be ruled out. So whilst the US economy was in a much stronger position, the assumption was that the Federal Reserve would most likely have to stay on hold or even raise interest rates because higher tariffs would lead to higher inflation. Now it seems that investors are more worried about weaker economic growth, and so those growth concerns are far outweighing any worries about persisting inflation, and so they're going with they're betting pretty much that the Fed will prioritize growth over inflation in the coming months, and they will cut interest rates a lot more aggressively than they've signaled, and so this is leading to a much weaker US dollar. And of course, generally speaking as well, the fact that the way Trump is going about his business in terms of tariffs, in terms of changing his mind, in terms of geopolitical risks, this is all creating uncertainty, and that uncertainty is adding to the downside risk to the economy. And not to forget, of course, the expected layoffs in government departments from, of course, Elon Musk's Doge department, which is trying to cut spending. So all of that is also weighing on the growth outlook.
As you said, Trump is creating a lot of uncertainty. And as I mentioned earlier, he seems to be backtracking on his initial tariff announcements, delaying some of them for a month. But Canada apparently is not backing down. So how do you think this trade war is going to play out moving forward?
So indeed, we've seen some retaliatory measures being announced by Canada and China as well. Overall, it looks like we're going from this situation about when for such a long time there's this notion that of U.S. exceptionalism, that whatever happens, the U.S. economy is able to withstand it, and we've seen other economies suffer quite a bit over the years, whether it's a pandemic, whether it's high interest rates, whereas the US economy was pretty much sailing along without much damage. So that sort of picture is kind of changing when it comes to the US economy. Of course, the weak data we saw, it's early signs yet. It doesn't mean that we're going to keep on getting weak data. But overall, it does look like that the US economy will not be immune from this trade war. And so this is, kind of taking the shine off the US dollar, and we're seeing other currencies not suffer as much, and we're even seeing some currencies really rally against the US dollar. But overall, there's a lot of uncertainty. The world economy will probably take a hit, at least in the short term. So it's definitely going to be quite turbulent times for the global economy, as well as, of course, for financial markets.
And with that in mind, Rafi, looking ahead, how do you think this whole situation could impact the U.S. economy and thereby the U.S. dollar?
So it's interesting how investors have all of a sudden turned rather gloomy about the US economy. As I said, it's not just about tariffs, it's the sort of the entire unpredictable nature of Trump's leadership that's causing a lot of angst among investors. And so should we see this isolationist stance of President Trump kind of become even more prominent? That's not going to bode well for the US economy. The risk for the dollar, though, is that investors are assuming that the Fed will respond more strongly to the deteriorating growth outlook, particularly if we see the labor market suffer as well, than to, say, the possible upside effects from tariffs on inflation. But the Fed may not be able to cut rates that much if inflation overshoots its target significantly, or if the hit to growth isn't really quite as big as some analysts or some investors are expecting. So that's kind of potentially means that we could see a bit of a rebound in the US dollar. But even then, the Fed, if the Fed remains cautious about cutting rates, paving the way for a possible bounce back, it's hard to see the dollar recovering that significantly, because when we have stagflation, which is probably what's going to end up happening, which is a combination of sluggish growth and high inflation, then in such an environment, a currency really doesn't prosper necessarily.
I see. Rafi, thanks so much. This was a special report here at xan.com.